let's touch on what's been happening on the market. So everything in positive territory.
Yeah, they're quite a nice market. I mean, I must admit, it's very hard to get bullish at this level, but the economic news in the US at least indicates quite clearly there's no double-dip recession on the horizon. Yeah? The inflation news out of China is very good, because no matter what picture you paint of China, if you paint a negative picture of China, do not forget one critically important factor. Chinese can stimulate their economy if they have to. They've got dry ammunition. No one else has.
And inflation is down to 3.2%. So that's looking
inflation's
good.
Extremely good news. Lower inflation in China. We spoke about this months ago, saying to me the biggest risk is runaway Chinese inflation. That little bear has now gone to bed a little bit, because inflation actually is good, and it's mainly on the back of falling food prices. So our market is chugging along at that 34,000 odd level. Markets worldwide had a bit of a fright 2 or 3 days ago when China said they're going to grow at 7.5%. But I mean, I suppose that's to be expected.
Yeah.
And generally speaking, with 1 or 2 exceptions, company results this week have actually been good. They've actually surprised on the upside, that they've generally been good. So we're chugging along, but don't get too excited yet. Don't invest all your money in shares at this level. But the outlook doesn't look dire, so we shouldn't expect a major collapse in the share market either.
Okay, so when we also see, and we've spoken on the whole Greek scenario, when you look at what's happening in the US, employment is looking much better there.
Yes.
From a non-farm payroll perspective over the last month,
Yes.
but unemployment is still stagnant. It's sitting at 8.3%.
Yeah, but I mean, you must remember there's lies, damn lies, and statistics. When they count unemployment, they take out of the pool of potential people who can be employed those people who are disheartened and just given up. Now, what's happening now is, because the economy is generating more jobs, more people who gave up looking for work now start to look for work again and get counted as unemployed in the number. So it's a funny.
It's a bit of a volatile number that comes
in other
through.
words, the number of new jobs that have been created equals the number of people who previously gave up and were sitting on their porch drinking beer, have now come back into the job pool looking for a job now. It's still good news when you create 227,000 jobs, and maybe equally as important when you revise the previous numbers up quite significantly for the last 2 months. So the employment side in the US is not good, but it's certainly looking better.
Okay, so let's touch on what we see here in South Africa, because at the end of the day, we're expecting around 3% growth. We've spoken of the monetary policy scenario.
We're not going to get much more than 3%.
We're not going to get much more than 3%. And it's interesting because Brazil only grew by 2.7% last year.
Yeah.
And that's a BRIC nation. So we're pretty much in the same band, but we've also got to take inflation into consideration.
Yeah, look, we've got an inflation issue this year. I wouldn't even call it a problem, because we know why we've got inflation. It's not because there's excess demand. There's very little excess demand in the economy. We've got inflation because of the oil price and Eskom and municipal levies, essentially. Those are your 3 major items. Now, luckily enough for us today, NERSA said you're only getting a 16% increase to Eskom, where they previously were asking for 25. So at least what the state president said in his speech a while back said that we're going to talk to NERSA about limiting Eskom's increase. 16 still bad, but it's better than 25 or 26.
Yeah.
So there's a little bit of inflation pressure out of the system. And this is the last year of these increases. Next year, we're probably only going to get 7, 8, 9% increase in that. So it's not all that bad in South Africa, but essentially our problem is we haven't got the infrastructure to grow faster.
Yeah.
That's the real problem.
So, I mean, how do you think government should be funding this? There's a lot of talk as to whether we should be putting pension funds to work.
Look, the prescribed asset story is a long story. It's been around forever. And as we've experienced with our government, you get a lot of talk about a lot of things, nationalization, and we all know these things. But as far as the macroeconomic management of the country is, well, more correctly, the fiscal management of the country is concerned, they actually haven't done much wrong. I mean, we could argue the government is why Eskom's in the trouble it is now, but let's put that aside. When it comes to the actual fiscal balancing of the books, they've done well. I don't think prescribed assets are coming back in, because prescribed assets actually interferes with everyone's life. not just the rich's life. It's everyone's retirement is interfered with.
Yeah.
And
it's
it's
just too
never a
risky.
good sign. I mean, they introduced tax on retirement funds a couple of years ago. They eventually dropped it because they saw the detrimental effect that it had on people's savings and their pensions. Tax is out now, you know, so we might be very skeptical sometimes about what the government says in that, but by and large, what they've done has actually been the right thing as far as the fiscal management of our country is concerned.